Hi guys. Sitting in front of me right now are three cups. You'll notice that one of these cups is different than the other two. If I shifted them around and you knew that there was something inside of one, you'd know which one it is because it would be easily identifiable. There's the battery. Business is run in three different levels all the time. And if you can begin to think about the three levels that businesses operate in, you'll begin to understand how financial statement works and how financial balance sheets work. And then you'll understand after that the rest of the balance sheet, the income statement, the retained earnings statement, and the cash flow statement and how they flow together. When businesses operate, they have three things they have to do. First of all, they need capital. They can't operate without capital. Businesses have to have certain items, computers, someplace to operate in. The classroom you're sitting in is part of property, plant, and equipment that will go on as something the businesses own. And those things the businesses own and use are considered useful in their operations. But to pay for those operations, the operations is one cup, to pay for those operations, they have to have other things. For example, they have to be able to invest the money that they make. If they don't wisely invest the money that they make, obviously they're not going to be in business very long. The other thing they have to do is they have to be able to finance. And there's two ways to be able to finance. One way, of course, is to sell part of their business. But who wants to sell part of their business? You don't want to have to give up part of your profit, do you? It's like sharing a paycheck with somebody else. You have to now take your paycheck and divide it in half. Give half to somebody else and keep half for yourself. You want the whole thing. Well, businesses can finance by selling their property, selling their business, or they can get people to give them loans. Well, if they get them loans, then everything after that loan is paid off is theirs to keep. So there's three different containers. You'll notice that the balance sheet, which is the very first financial statement we need to talk about, is separated also into three different sections. Those three sections are the assets, those things that the business owns, the liabilities, those things that business owes, and the stockholders' equity, those things the business owes to its owners. All businesses, of course, owe a due diligence. Those managers working for the business and running the business owe a due diligence to the owners of the company, the stockholders of the company. And a lot of times this equity, called owner's equity, is also called stockholders' equity if you're a certain type of business. And in my next video, I'm going to talk about the different types of businesses that you need to know for this class.